I'd like to say hi to everyone. I'm McAndrew Rudisil. I'm the chairman and CEO of ETHZilla, and Vivek Raman, the CEO of Etherealize, is joining me today. We're going to start with the disclaimer and a quick summary. So before we begin, I'd like to note that certain statements we make today, September 30th, 2025, could be considered forward-looking. These statements are based on our current expectations and assumptions, and actual results may differ materially due to risks and uncertainties. We do not undertake any obligation to update these statements after today's discussion. For a full list of risk factors, please review the disclaimer on this slide and our most recent filings available at sec.gov. A copy of this presentation will also be available on our website, ethzilla.com, later today. All right, with that, we're going to start talking about ETHZilla, built for everyone.
Great to see you, Mac. Let's dive right in. Let's dive into the thesis for ETH. Can you tell me about what ETH is, what it's used for, and why the institutional adoption moment for ETH is right now?
Yeah, good to see you too, Vivek. We are now at the point where there's a real use case for global institutional adoption of Ethereum. ETH acts as a reserve asset. The supply is constrained. It has its own yield curve, and I would argue that it is a deflationary asset in an inflationary world. Number two, ETH is fueled by the ever-increasing demand for layer 2 uses as collateral for infrastructure. ETH is the collateral that secures stablecoins and layer 2 protocols that generate yield. 200 billion is a drop in the bucket compared to where global stablecoin adoption is going. And number three, institutions are ready to use Ethereum and have real need to bring assets on chain. And this is happening now.
Great. So stablecoins. I'll start with stablecoins. Stablecoins have been called the ChatGPT moment for Ethereum. How does stablecoin adoption grow Ethereum to institutional scale?
Yeah, so good question. The whole world operates on a dollar-denominated transaction system. When you live in a developing market or in a country that does not have proven monetary and fiscal policies, holding US dollars is the pathway to getting ahead of inflation. Once you have USD, then you start looking for USD investments. Stable coins are the easiest way to get US dollar exposure, and Ethereum is effectively a way to get exposure to monetary supply growth. The data tells the story. You're going to see more built on the Ethereum network, and by being exposed to our business, you have access to all these assets and their increase in adoption. ETH is the collateral, and its security and disaggregated infrastructure provide the network strength. Stablecoins are the first killer app. Now the real AI moment is when assets get tokenized.
Yeah, I want to repeat that because the real AI moment is really tokenization, and tokenization will happen primarily on Ethereum. Why are stablecoins the first killer app for tokenization on Ethereum?
Well, I think it's really important to look at this chart. Let's look at stablecoin data over the last 6 years. We have gone from nearly zero supply of stablecoins to over 200 billion of stablecoin supply and 6 trillion of global exchange on stablecoins over the last 6 years. And Ethereum is by far the largest beneficiary of this growth. Why is this important? I think we have to think back and talk about a finance story. MasterCard went public in May of 2006, and Visa went public in March of 2008. And why am I talking about this? Because it's virtually an identical story. Only this one is moving a lot faster, and that is why we are involved. When MasterCard IPO'd, it had around 800 million card users. Today, there are over 3 billion plus cards, approximately 4x growth over 20 years, and transaction volume is now at $9.75 trillion. Visa was a cooperative that was established in the 1970s, very similar to Ethereum. It now has 3.9 billion users. Combined, MasterCard and Visa transaction volume was at 5.1 trillion in 2006, and today it is collectively over $40 trillion. The There are 8 billion people in the world. Roughly half of these people don't have access to traditional financial services, but most have access to smartphones. Here's where stablecoins get activated. A combination of the people without financial access can all get access to Ethereum and stablecoins. This chart, just like what we saw with credit and debit card transaction volumes, is going to continue to move up and to the right and accelerate. Ethereum is already the leader, and it's going to remain the leader because it is programmable, has never had downtime, and it's diversified.
So the security, the reliability, the uptime, and the track record of Ethereum is what makes it the safest blockchain to use. We've talked about ETH, we've talked about stablecoins and tokenization on Ethereum layer 1. What are layer 2s, and why are layer 2s important to ETHZilla?
Let's start with the basics. Layer 2s are scaling solutions built off Ethereum layer 1 that process transactions. They allow Ethereum to move faster and handle transactions off-chain, either privately or publicly. They improve scalability. They improve security. They accelerate the network. Layer 2s are what institutions are going to keep building on, and I believe most major institutions are going to want their own layer 2. We are investing in layer 2 protocols that generate fees for staking and restaking, as well as negotiating select opportunities to receive tokens where we view long-term alignment. We can generate substantial cash flow by deploying our ETH into high-quality layer 2s and identifying the institutional partners that we want to work with. The expansion of layer 2s is another up and to the right story, being driven by stablecoins, institutional use case adoption of proprietary transaction layers, and the absolute need for greater processing and lending capacity on Ethereum. Ethereum is global. We are already seeing global corporate adoption, AI adoption. WorldChain is on Ethereum layer 2. Sony is on Ethereum layer 2. Coinbase Base is on Ethereum. Robinhood is building their L2 on Ethereum. UBS and Deutsche Bank are building L2s on Ethereum. JPM deployed deposits on an Ethereum layer 2.
L2s really are the best business model in crypto. Layer 2s provide scalability, privacy, and customized blockchains that are all secured by Ethereum and allow corporations to keep their profit margins as well. L2s are going to grow. Stablecoins and tokenization are secular trends. What does all of this mean for ETH as an asset?
Great question. Let's talk about Ethereum. Funnily enough, I think we're still in a teaching moment for Ethereum globally, based on all the conversations that I've had. There are a lot of people who don't yet know what it is, and it's been in a 7-year holding pattern from a price perspective. With all the activity being driven on chain by what we just went over, we believe that the value of Ethereum is fundamentally going to go up a lot. And I think the question is how much. I think when we see a sustained move above 5,000, it can easily go to $17,000 to $20,000 per ETH on the initial impulse. And what's the basic math here? Bitcoin has a $2.2 trillion market cap. People use it as a store of value. It's a lot easier than moving a truckload of gold around. And Ethereum is transactionally more efficient. Ethereum is the transactional mesh to the global economy. If it picks up a fraction of the global financial market, 2 trillion is quite an achievable market cap. With 121 million ETH outstanding at 2 trillion, that gets you to 16,500 per ETH. And I think that's the low end. Ethereum is going to get lumped in with gold and Bitcoin as a store of value once traditional finance investors start to think about it as a yield asset and understand all the use cases. That is when I think you see widespread global adoption and demand for ETH because of the connectivity with layer 2. Once this happens, total market cap will continue to trend higher as both a reserve asset and a utility asset. Ethereum really is the global app store. It's a layer for capital transactions, and finance is the first application.
16,500 per ETH low end. I love it, and I think the sky's the limit. ETH really is the most compelling asset in the most compelling blockchain ecosystem. We're truly at a defining moment here. Let's talk about ETHZilla. How does ETHZilla put all these pieces together?
ETHZilla is the bridge between the digital world making money in the Ethereum network and Wall Street. And there are three parts to our business model. Number one, we hold ETH for appreciation potential, which we just discussed. Number two, we deploy ETH in layer 1 and layer 2 protocols to make money 24/7. And number three, we are working to put real world assets on chain and tokenize yield. Wall Street is going to move credit and real world assets into this domain, and we are going to be in the middle of it. Everything that is securitized or transacted through Byzantine networks involving millions of touch points is going to move on chain because it is more efficient. We are together making Ethereum the yield platform. ETH captures activity and growth, and ETH is exactly where Bitcoin was 5 years ago.
It's exciting. Let's dive deeper. What are the components of ETHZilla's business model? Why is ETHZilla much more than just a company that holds ETH as a treasury asset?
Vivek, I want everybody to focus on this chart on the right. So number one, we have ETH and want to buy more when it's accretive for equity holders. And this takes discipline to execute assertively. We need to put billions to work in layer 2. So we need agreements to do it. And we have to create the scale of DeFi access to execute. This is the same as cutting any deal. It takes time and money to negotiate and work through with the right partners. Number two, bottom of the chart, tokenization. Our DeFi partners tokenize, which we participate in. We will participate in stablecoin lending and creation. Then we'll use the yield and tokens to develop ways to bring real world assets into the ecosystem. We will get them listed so they can be fractionalized on their own respective networks and exchanges. Last, we will bring novel yield into the network, which further increases stablecoin volume by a transactional increase because the cash flow from those tokens is paid in stablecoins.
That sounds like ETHZilla is building a whole new economy. ETHZilla creates a positive flywheel of activity in Ethereum. It drives value to all parts of the ecosystem, from ETH to stablecoins to tokenized assets to layer 2s. What's the end game for the traditional finance world and Ethereum? What do you think the world's going to look like when Ethereum is the backbone of the financial system?
Vivek, we're just integrating now what's already going on in the DeFi world and what's already happening on Wall Street. So what this is it's ETF 2.0. This is the big opportunity for ETHZilla, and we are marching down the road. We've discussed stablecoin growth as a transactional layer, and layer 2s as an engine for cash generation. Now we get to real world assets, which we are very interested in. The cash flow profile of these real assets will be put into a tokenized format so they are easier to track and transact. At ETHZilla, we will be involved in the execution of these transactions, the ownership, and we will need to be involved in the place where they will ultimately reside, whether privately or publicly accessible. And both pathways are going to operate concurrently. Structured credit, untraded private assets, land, regulated large-scale high TAM assets that are currently securitized. All of this is going to come on chain. This is ETF level 2, and this is where you will see the full potential of the blockchain.
Sounds like this is how we upgrade the financial system structurally. Can you now touch on ETHZilla's current deployment and yield strategies?
Yeah, so this chart lays out what we've shown on the weekly presentations of our Ethereum holdings. We have previously announced partnerships with EtherFi and Puffer ETH as restaking layer 2s. These were our initial layer 2 investments. We also continue to hold a substantial amount of ETH. We plan to deploy that into more layer 2s over time. So you'll continue to see the portfolio get diversified. And we're very focused on partnering with the best partners in the layer 2 ecosystem.
That's awesome. So now let's walk through some key metrics for ETHZilla and talk about how you think about MNAV.
Yeah, the market likes the MNAV multiple, so I think it's important for us to lay it out. We have approximately $400 million of ETH. Our MNAV is at 0.96 times right now, and MNAV represents enterprise value divided by the ETH NAV, which we have laid out. And then lastly, our cash is an embedded MNAV premium option for the future to acquire more ETH as the convertible note is converted. And with that, we'll jump to the last slide.
ETHZilla really is much more than just a treasury company. It's a cash flowing vehicle that brings the real world to Ethereum. How do you think, Mac? How do you think about valuing the whole of ETHZilla?
So I think about ETHZilla as a sum of the parts, and I think that you have to look at each of the individual businesses that reside within ETHZilla. So number one, I think you have to value the cash flow of each of these businesses as a separate recurring transactional stream with a very long tail. It's almost a perpetual terminal value. You have the value of the hard assets, ETH, which we believe is going to appreciate, and we've covered. Two, you have the US dollar assets, which are generating yield. As the assets grow, the fixed cost base doesn't need to increase, and the gross margin, the EBITDA, and the net margins keep expanding. Using MNAV as the only multiple to value ETHZilla is going to prove to be the most simplistic way to look at the enterprise. You would never value a technology company based on its net cash and assets and ignore everything else. So over time, we are building a stream of cash flow and net income, and relative to the growth of the asset base, it is going to become apparent. And I think the market will recognize that we are building the next global transactional mesh on top of ETH layer 1, and ETHZilla sits squarely at the center of this convergence. And with that, I'd like to conclude this presentation and would like to thank everyone for joining us today. And I'd like to thank Vivek for hosting.
Thanks, Mac.